So today in the video presentation is basically about the stock market in the US that's on the edge of the historical crash. And here's the terminologies on about the news. All the details has been written here. One of the terminology I learned is S&P 500. Another is crash confidence index. And now let's start about the news. So the most important is what happened. The stocks in the US are selling off again. This week, the S&P 500 has taken the deepest dive since June, dropping 5.5%. And that's basically what happened this week in the US stock market. And why did it happen? Basically, there are five factors, and I'm going to explain it one by one. The first factor is the historical crash of the Europe's technology giant shocked investors. A company named SAP is one of the Europe's largest tech corporations. And what just happened this Monday, SAP stock has been crashed for a 23% drop, which wiped out 33 billion of the investors' money. Thus, investors are getting terrified, and so they are not willing to put their money in the stock market anymore. And another factor, a company named Pfizer. Pfizer is the American drug giant, American company who appears to be leading the COVID vaccine race. Last month, the company implied that it might have a safe and working vaccine by the end of October. However, as now the month is nearly coming to an end, and yet the company didn't have any update. Pfizer's silence has made some investors start to think whether the first round of tests of the vaccine has been failed. Meanwhile, two other vaccines have been put on for pause as well. This has led to the drop in its stock price. And the third one, after sharp break from August and September, the number of COVID in the US has been blown up to a fresh all-time high. Meanwhile, major countries overseas are going to partial lockdowns again. This is raising investors' concerns toward the global economy in the upcoming months. As you can see from the graph that the number of people who get infected by the COVID-19 is getting bigger and bigger. And so the investors, they don't feel like the global economy is going to rise. So they have some kind of concerns. So that's why they're not going to invest into the stock markets. And what's more, even though the CARES Act bill, which is the government's given benefits in America, similar to what we received like 50,000 yen from the Japanese bank, and this is the benefits funds that the American government gives their citizens. Even though the CARE Act bill has helped two-thirds of the unemployed Americans getting benefits greater than their lost earnings. However, most of the financial assistance programs are nearly to an expiry date. This has raised people's concern to tighten their belts, thus they will have no money to put in the stock market. And eventually, the last factor, based on the research of the US Crash Confidence Index done by Yale University, we can see from this graph that investors are holding a low confidence toward the stock market, and most of the investors believe that the stock market will experience a huge crash. So they don't really have the confidence in the stock market. They think there's going to have a huge crash for the stock market. So that's why they're not gonna put their money into the stock market and even withdraw the money from the stock market. And what are the potential impacts of the event? Due to the sudden drop of SAP stock price, SAP's American peers suffering drops on its stock price as well, including some 10 giants as IBM, Microsoft, and Adobe, which dropped for 8%, 5%, and 5.5%. And another potential impact is due to the silence of the vaccine inventing companies. People are growing public distrust in the vacancy and doubt about the efficiency of it. And the last part, what's my opinion? As we can see that one company's crash could easily lead to the crash of some other companies which rooted in the same industry. Investors are very sensitive to any changes. Any correlated news or information might lead to investors giving up their idea for putting their money into the stock market or withdraw their money from the stock market. It was those uncertainties results into the stock market being unpredictable, and that's what I learned from the news. And the last is a reference. I put all of the reference I used to here. And thank you for listening.